Hello and welcome to today's Where's the Trade. My name is Joshua Bellinger of OptionSizzle.com, and this is our nightly video where I focus in on a specific stock that saw increased option activity, explain that activity to you, how to trade it, and why it's meaningful. So today, Oil States International was seeing its second day of unusual interest, with today the larger amount of call volume traded. The volume was about 20 times its last 21 days of typical option volume, and the trade that stands out is in the December contract, which has 232 days to expiration. And you notice here that the December 100, 115, and 130 strikes are in focus. Well, this trade is a butterfly spread, and I've covered this specific type of trade a few months ago with MHP, and this is targeting the 115 level. Well, prices closed at 91.99, and when we start to look at options with 232 days, we could start to formulate more of a fundamental reason, or start looking more at the fundamentals of the company, because it is a longer term bias. 232 days to me is longer term. The fast money for me is on a shorter term option, which would be a front month option or even a weekly option. So the purchase price of these spreads, these butterfly spreads, were at $2.35. This similar trade traded yesterday, and you can see it here in the open interest. This is going to add to that open interest. So the total on this is just about over $1.5 million put into this idea that this probably large institution or large firm that has put some decent amount of research behind this company is putting that kind of money behind. This is the kind of trade that you want to focus in on, because this has a lot of money, A, behind it, and B, the person or the firm putting this trade on likely has done a lot of due diligence on this company and this idea, and the structure of it is something that they've taken time to formulate, and they're looking to profit going into 115. Now, what we want to do is take a look here at the chart, short term, on this OIS. You can see after earnings here, just after earnings here, it popped higher. Now we want to look at a longer term time frame, because now we're going to be looking at the weeklies, and you can see here this 90 level was a level that was resistance, and stocks that typically will cross 90 will go to $100. So it's been in a bit of a sideways range for multiple months, and probably, or not probably, but multi-year as well. So this consolidation is actually fairly good. It has been able to hold the 60 level. It's consolidated there, probably worked off some sellers and some new buyers here. And looking at some of the fundamentals really quickly on FinViz, the PE ratios look fairly good on it as well. So you would have to do a little bit more research on it. But following that trade and following what exactly those footprints show you is a good start to structuring a trade longer term, if there is something that you do want to invest into longer term, targeting that 115 level. Make sure you check out my video that I created a few days ago on InnerWorkings, and this was talking about breaking the $10 level, the 3 reasons. It's about a 10-minute video, a lot of information packed in there as well. Also, make sure that you, below the video, like the video and leave a comment. This doesn't cost you any money, but the effort to let me know your thoughts and your appreciation for the video is greatly appreciated by myself.